Monday, December 2nd, quick window video for you wonderful ladies and gentlemen. Cyber Monday. Hope everyone had a good Thanksgiving. As far as VIX goes, still languishing down here. I love the idea of using the low VIX here to put on cheap protection. If you want to do it for the first quarter of next year or even just into the end of this year, makes a lot of sense to me, particularly if you're playing for year-end rallies. I think a lot of the depression in the VIX has been managers taking hedges off in anticipation of a run-up and not wanting to crimp their returns. I heard on TV today that the only thing that could take the market down is an exogenous event. Okay, maybe so, but sometimes those things happen, and I'd rather buy the protection when it's super cheap than when the hurricane is rolling on through. As far as the ES and the NQ go, over some key levels, I think the bulls are fine as long as they hold 60, 53 quarter. Anything below that could see a liquidation break to at least the 200 MA 30-minute, currently 60, 36 half and rising. After that, we need to hold the 6,013 down to 59.90 quarter-ish area, basically that 6,000 level, which is right in between there. As far as Qs go, they were able to punch up over the 21,054.75 to 21,121.75. Got to the next key level at 21,237.75, and we seem to be consolidating there. Above there, you're looking at pretty much clear air, so there could be still further prices. Pullbacks now obviously need to hold that 21,121.75. If we were just to repair the rich close today, that would be 21,152. The apples to apples of that rich close repair in the ES would be 6,057 half. As far as SPY goes, we finally got the 2 times range, or just shy of it by 3 cents, at 604.35. I think pullbacks are fine as long as 600 holds. Below there, we could see a larger liquidation break, probably to the 10 MA, wherever that is at the moment, currently 596.13 and rising, or maybe even the 20 MA at 593.23, but I'm assuming those are buys, at least on the first touch, until they prove not. If you want to put on some protection, I like using the 50 MA as a lower strike now, because it's right in line with the yellow channel low. It's currently 582.88 and rising, so if you want to do something around that 586 area, which was of course the key breakout from 1017, I'm down. If you want to sell some upside calls, the 2.618 fib extension as 615.62, and that yellow channel high is around 610 if it were due tomorrow. As far as Qs go, they finally did play a little bit of catch up here, and we are right around our reference highs from 1111. I think the bulls just need to stay over that 515.58. If they can, the 2 times range there is 525.30. If we were to do the full Monty up to the green channel high, it'd be 533.35. The 2.618 is 540. And there's another channel that I wouldn't put too much weight on, but if we were to go to extremes, it could be 546.47, but probably closer to 550 by the time we would get there. Generally, I like selling upside calls against the Qs. If you want to go a little longer dated, that 540 makes sense. If you want to do an enhancement and you own QQQ, maybe buy 525, sell 2 times 540. Usually I like to do whatever I can get on for a zero outlay, or maybe even a small net credit. And if you have, let's say, 100 shares of Qs, you do 1 by 2. The 1 by 1 is covered by your shares, and then the 1 by 1 in the calls are covered for that additional part. Apple acting well. I had told you I didn't think I saw the head and shoulders. Bulls do need to hold over that 237.23 to 237.49 area. If they can, I think we're going to 255.27, 261s, and maybe even 266s. I would think we could at least double up that range to 255.27, and I think you can be long Apple, like I said, as long as those 237s hold. I don't get outright bearish until we lose 232.92, but that zone really does need to hold, or else it is going to probably come back down to the lower end of the range in the 120s to 121s. NVIDIA a little laggy today, but was still up. It needs to get over that 140.76 to 144.42. Anything below there is a little vulnerable. I don't think it's a short until you lose the 50 MA at 136.12, and then really the 132.11. Support probably comes in down closer to 126.15, which is the 100 MA, and roughly the green channel low, maybe a little overshoot there. The googliness is back up over 169, and it better stay up over 169 or there could be a larger pullback. If it starts losing the 168.51 to 169 area, basically the 50 MA and that key neckline zone, which lines up with the 50% fib of the range, then I think we're coming back down to the 164s, which line up very well with the 200 MA, which has been support in the past. There may be a little resistance at the 20 MA at 173.59, but I do think this ultimately could get back up into those 180s to 182s on a bullish tape. Tesla is still acting very well. Musk is clearly the winner from the Trump election. Anything that stays up over the 10 MA here at 343.09 is fine. Anything over 358.64 is good to go for that move up to 403s. It just looks like we're bull flagging and the pullback held the top of the green channel high. That's usually boding well for still higher prices. TLT is continuing to rally. We had a pretty good buy on that when we saw it in the 90s. It is now consolidating above the downtrend, but it's not really ripping here. It's sort of just marking some time. I do think that the 93.86 gap fill attracted some sellers. My guess is the 100-day MA at 95.18 to the next gap fill at 95.31, which was from 10.16, probably attracts some sellers. That whole zone there, though, from 95.18 to 95.53, which is the 50% fib, is likely my upside target where I'll bail on the trade. Ultimately, I do think this gets up to the 96.74-ish area, which is the final boss gap fill. That really makes a big deal for me. There is another one up at the 98.49 level, but I don't really see that as key because it was still within range. That wasn't the breakaway value type of gap. But I'm a trader. I don't necessarily play for the end ranges. I'll be perfectly happy if we get into the 95s to book that gain. Dollar continues to act very strongly. I think President Trump's talk about not allowing the BRIC nations to replace the dollar was very key to this. The bulls in the dollar need to hold over 106.517. Bears need to break the 20 MA at 106.066 and rising. Gold, not exactly as in favor as the digital gold, and we do have a potential head and shoulders here. I think if the bulls can't hold 240.64, they're in some big trouble. And they would need to get over 246.50, 350 MA to really get me interested in any major way. We have been bulldogs on the Bitcoin, although it is consolidating here. I think the raised stop now is the 10 MA at 96,025. Clearly, we're going to go into that 100,000 level again. I wouldn't be surprised to see it overshoot here. We got it in the futures. Don't let it get below the 10 MA on you or stop out. Ether is catching up a little bit. It is holding over the downtrend line. I think you could use the overnight low as a raised stop at 36.58. I don't think it's a short until you lose 35.99. The next upside targets would be 39.80 half and 41.38 half in the futures. Generally speaking, I still like using up opens to put on protection. VIX is super cheap. Yeah, there's probably going to be a year-end rally, but everyone's expecting it, so why not put on a little bit of protection while it's cheap? You don't want to buy VIX when it's in the 30s or even the 23s, which has been range high. You want to buy it when it's sub 14. I think that the market likely is going to be able to continue higher into year-end, all things being equal, but I don't necessarily like to be too greedy, and I do like to book gains along the way, and we never assume end ranges. That's it.